For example, if it's climate change, the company's impact potential is how much CO2 it will be able to remove or capture. And then throughout, when we're working with the startup, it's about bringing down the cost of what it takes to capture that CO2. And I think what's interesting for climate tech startups is that they are now, because of the voluntary markets, they're getting paid for carbon offset. The EQT Foundation was established when the EQT listed on the stock exchange. It was 14 partners who came together and gave away their shareholding in EQT. So it's a foundation that owns the corporate and receives dividends and donations, but also carry from the EQT funds to give back to society. The foundation operates in two ways. So it gives grants and scholarships to researchers who are developing new technologies that can have breakthrough potential for our societies. But it also does impact-first investing, meaning that it is investing from a foundation, but it gives a lot of support to the entrepreneurs. So it goes in at a very early stage called catalytic capital, where the entrepreneurs are experiencing a lot of obstacles to actually be able to attract more conventional capital for growing and solving the problems that our societies are facing. And I think a good example is one of the where they were working on in Living Carbon, the company is called, to bioengineer trees to grow faster, deliver better quality timber, and capture more CO2 from the air. And when we invested in them, it was a big technology risk if it was possible to do. But with our help, they have also proven that they can have trees grow 40% faster. But we have also, through our infrastructure platform, connected them with a landowner, securing a contract for planting 4 million trees. Very good question. What we look at is the impact potential of the company, meaning that the problem that they're solving is big and important to solve, that their new technology or solution, a good way to address the problem, and that it's possible, with some help, to scale it, to solve it on a global level. Also, that by solving that problem, they're able to find a way to create value in society to someone who has an ability to pay for what is being solved. So when we talk about a sustainable business model or an impact model, we often talk about who owns the problem and who can be part of solving it. Yes.
Is that correct?
That is correct, and a very good connection to your question, because from the foundation, when you have that hard screening on impact, that it has to be a link in how the company is making money, impact washing would not happen. I think we see impact washing when a company has its core operations in one area and tries to have impact in a different area. So what we're seeing is you avoid impact washing when it's integrated in where you're actually doing business, when it's connected in a way so you cannot just put it on top. And I think the interesting part now in how the ecosystem on impact investing is developing is that more and more systems are in place to be able to set clear, quantifiable impact goals, but also to report on the practices. So as an investor, you say, when we had a selection process, we looked at these impact metrics and these themes, and we decided not to invest in these sectors. And then under your holding periods, you also talk about how you're working with the company to drive impact. I can start off with some of the investments we've done in the healthcare space, which is about giving access to services to more people, but also solving some of the diseases that hit poorer communities. So one of those investments is molecular attraction, and they have developed a liquid or a chemical blend that can attract mosquitoes away from human beings, but actually being able to attract them to go somewhere else in a very environmentally friendly way, where because of the reproduction of mosquitoes, you don't have the consequences of also taking out the species, but only taking out the individuals that are carrying the disease. So a breakthrough technology
Yeah.
in the space of combating malaria.
Oh.
I think it's very interesting also seeing in what regions malaria is present, and also that the majority of deaths from malaria is below the age of 5 years.
Yeah.
I think we're also seeing with the trend of urbanization and materials going into cities, we need to find new alternatives to those materials. One of the startups that we've invested in is Vision, that are developing green cement and also made of air that has a carbon negative fossil-free plastic that can be used in the facades of buildings. So for every ton of material, you capture 1 ton of CO2 inside the material. And after the use, the material can be captured in the growth and have long-term storage of the carbon. I think there's one distinction that's important to get right at the very beginning of starting impact investing. It's understanding if you're an impact investor who wants to create impact and financial return at market rate, or if you're more of an impact investor that wants to create impact and you're okay with not having the same returns. So I think majority of the field is now developing, proving that you can have impact and financial return at market rate. But there's still areas where it's hard to solve the problems, like giving healthcare access in a rural area that costs more to reach these people. And then you might be okay with taking a lower return for driving that impact. I think what is interesting is that we are in the first case, but we're very, very early stage where it's hard for other investors to go in. So that our capital is additional in bringing the companies to where they will have impact and return going together, so that we can attract other investors of conventional institutional capital to go into these startups. What we are doing for the other bucket of impact investing is that we're working with the financial market, so that we're setting a value on the impact they're creating, so that these companies can also become profitable companies, because we as a society learn how to appreciate and how to value what they're doing for society. Today there's a market failure to why these companies are not as profitable as they should be if we as society had paid them for the effect they have on inclusion or in solving climate change, for example. I think it's very early to say based on my meetings with startups, but my impression from the ecosystem is that impact often happens naturally in the health tech, med tech space. When you have technological component as a very natural way of a startup to emerge from a field. I think on the climate change technology part, that's an area we want to explore more, because I think having a country that's so high on technology development and being such a industrial economy, the transition of all these companies to a net zero future will depend on a lot of that technology. So I think it's a great market for new entrepreneurs who wants to solve climate change with new technology. And I think that's one of the areas that we would like to be part of supporting in Korea.